Alrighty, ladies and gentlemen, good morning. It is Monday. What is the date today? Monday the 14th. That's crazy. Can't believe we're halfway through the month already. It's time for our Monday morning analysis. We generally do a Monday macro analysis, do a 4-hour sweep, just try to figure out what's going on, what we're looking at for the week going forward, what we're looking at for the next few 4-hour candles today within the day trading range, but mostly macro analysis, see what's changed since last week, see what are we targeting here, at least the first few days of the week. If we get different information as the week goes on, we'll change our bias. So where are we? What happened last week? We'll get to that. It was definitely a big push into the end of the week last week. As of right now, let's just get we'll get to that. Let's just get right to it. We start with Buckhorn here. Good old Buckhorn had a rough week last week, for obvious reasons. Not looking great structurally. It's not looking good. We already know what we're looking for on the downside, way lower, but we're not going to talk about that number right now. As far as right now, within a day, within the weekly context, what are we looking for this week potentially and structurally? Right now, we're in a range. I think it's pretty easy to see that we have an effective trading range somewhere in right here at the moment. What we don't want to do is start trading from the middle. We have a price action hamburger. Imagine this is a hamburger, and you got buns on the top and the bottom, and the meat in the middle. And we generally stay out of the meat. We stay out of the meat. Price action hamburger. Only enter in the buns. Giggity. So what we're doing is we're looking for a retest of either the low or the high. It's probably going high first. And then maybe we'll try to knock that. You can see right here where it sold off last time. Yeah, just simple supply and demand. And this has nothing to do with not really much to do with our actual day trading strategy that we do here in the group. But we're watching the important levels, the things that make sense price action wise and structurally. And that's the important thing, is structure wise what's happening. This type of thing, to be honest, from experience, is not great. When you're coming off of a high like this and you drop down into a consolidation, generally that would suggest a second leg lower. We'll have to see. We are on a broken low, so we don't want to start really heavily shorting it from down here. That being said, it wouldn't be surprising if it, I wouldn't be shocked if it went lower, but what I'm not going to do is start selling it down here. That's what everybody does. Everybody tends to have backwards psychology, and especially in crypto, when this Bitcoin, when this thing dumps like this, everybody's like, oh, it broke out to the downside, sell it. And they're selling something that they bought way up here, they spent, 2 months buying this, and then it drops and they sell it at the worst possible time. It could just as easily pop back up into that range. It's a big macro range. We've talked about this forever. So you could still view this as a macro range in a way. And what we don't want to do is sell the bottom of it, right? It's too late. You sell off the highs, and we had the right entry last week before the whole thing happened. Not going to get into the I don't know, skip that. Sometimes it's just a technical move that they try to explain with some news event. That's just kind of the way it is. Crypto's not having an easy time right now, obviously. A lot of people losing faith in it. Not surprising. Been talking about this stuff for years, but everybody is free to make their own decisions. That's the great thing about trading and just life in general, is everybody should be able to make their own decisions, whether it's healthy for them or not. So people are making decisions right now. A lot of people are getting hurt right now in crypto, and I don't want to see that. I don't like seeing people lose money, especially my people. So we're trying to stay out of this right now. At the moment, if you caught the lows or something, good game. But right now, middle of a range tends to be the most dangerous spot to trade, and for good reason. You have equal opportunity to get stopped out both ways. Think about it. There's no disproportionate risk versus reward. There's no outsized risk reward where you have a better probability of moving up than down, or a better probability of moving down than up. necessarily after a specific move. And that's the thing, is relative to recent price action, recent movement and volatility. Is there a disproportionate risk versus reward? And right now from the middle, nope. Leave it alone. Immediately look at it. It is a no-go. If anything, maybe shorter term time frames, I could see it pulling back a little bit. As far as right now, over the next few candles, we've kind of pulled off the bottom of the range back into density. I could see a scalp short or something. What I wouldn't be doing is going Moonboy Lambos either way from here, right from the middle. Not much to say. We all know what's going on with the FTX situation. It's just, I don't know. Not even gonna get into all that. No big surprise. Don't diddle in the middle. Nothing to say about Bitcoin. Watching levels lower. If we break the swing low down here, we know we're watching down here in the mid 14s. If we run up, we know what we're watching up here. This is just a refined level up here. The last point where your shorts were correct in the move and have not been stopped out, and that money is important. That's an important level. Right now, no trade. Skip it. Dollar. Okay, here we go. Dollar. Obviously, we all know what happened last week. Price action's a little weird here. We're just expecting a pullback off the low. We were scaling into this. We actually did a very good job of hitting it on Friday. We talk about that all the time, how some of the best entries you're ever going to get are going to be at the end of the day on a Friday, the time when everybody says don't trade. That's when the best entries you're going to get, if you're willing to hold over the weekend. Low risk. We don't hold heavy risk positions over the weekend. Low risk is a different story. And we tend to focus on low risk here. We're not YOLO scalpers here on GJ. We try to take a little more intelligent approach to the market than that, I'd like to think. So right now on the dollar, we're kind of in some, what you would call supply. Probably going through there. I don't, this level, I honestly pretty much just take it off of there, but this is going up. We're expecting a stronger dollar. Got some good positions on against the dollar. Looks like it's probably going to end up being risk off. Safe haven currencies up. We're going to watch the yen, the dollar, and the Swiss franc specifically for that reason. Right now, there's no reason to stand in front of a moving train here. The dollar is just again, the word disproportionately. It has come down disproportionately within the time range. It's come down a lot in a very short period of time. That matters, trust me. Use the analogy of pushing a beach ball underwater. You're at the beach and you push a beach ball underwater. When you let go, it pops back up to the surface. It's a mean reversion. And this is just likely to revert to the mean. It's probably going to be up here somewhere before it starts actually selling off and going into a range. What's probably going to happen is there be something like this, and it might pull back a little bit. It might even break the low, but it's probably, be some kind of range like this if I had to guess. But up first, we're definitely not shorting it down here. Lost your mind. No way am I shorting the dollar down here. Crazy. So we're betting on the other end. We're betting on a stronger dollar temporarily. Probably be risk off after all the stupid moves in the stock market. We'll talk about that in a minute. We'll get there. Just brutality in the markets. So right now we've got a stronger dollar, and that's what it's going to be. We have a stronger dollar bias until it's invalidated, but we also know that we're kind of coming into some traffic here. And we'll talk, this is, lower time frame stuff. We'll talk about that later on. We just want to see this push through this, and then, whatever. I'm not as worried about the supply and demand as the daily range strategy. So but as far as the macro moves go, and that's kind of what this is about, looking at what is likely to happen on the macro, what's going to happen this week. We're probably going to pull up a little bit. It's probably going to be a stronger dollar to have a retracement of some of those moves from the end of last week. It's just normal. It's a normal movement. Moving on into Aussie dollar. Right now, we're short Aussie dollar. First position, waiting to see if it's going to pull back before it pulls up to the obvious point. Last point where your shorts were corrected to move and have not been stopped out. That's what we're looking for. We already pushed through the money, and it may actually pull back and consolidate in the money above that shelf right there. It's possible that it pulls back into a range, and this is what we're watching. We're looking for some kind of a range in here, you know, like this, you know, whatever it's going to be. And we know that we're very likely higher. We're closer to the top end of that range than to the bottom with a stronger dollar short term. So we're trying to sell this first just to see. And if for some reason it pops up, which we know that there's a target higher, we could see that. That's whatever. But as for right now, we're going to be short Aussie dollar. It's already made a big move up, higher low, higher low, higher low. You know, at some point it's going to pull back, and we're going to be watching that. We've got our levels, and we're watching short-term moves on lower time frames. Where are we within our magic range? So our dynamic range, where are we? That, you know, shorter time frame stuff, nothing to say. But moving on into euro dollar, this is a little bit different. You know, we've actually entered some pretty relevant supply up here, we'll say. Again, coming down, looking very, very good. Got an entry from the tippy top up here, from the top up here, the very top in the wick on the highest candle. On euro dollar and pound dollar both, but just re-entered another. We took a second position here in the group just a few minutes ago, and it's looking great. So across my positions, everything's looking okay. Nasdaq's ranging, but it's okay. So euro dollar, you know, again, where are we? If we're likely to have a stronger dollar, what do you think is going to happen to euro dollar? And again, euro dollar is the strongest correlation that there is in the market with the dollar. Pretty much the strongest inverse correlation that exists is between euro dollar specifically and the dollar index, because of the way that the dollar index is weighted, 57% in euros. So as go the euro, the dollar index generally goes the opposite direction. So if we know that the US dollar is likely to gain, then we know that euro dollar is likely to lose, right? As far as strength as an index, the currency indexes themselves, indices, the plural. Okay, I forgot to take some of this stuff off of here. Yeah, so nothing to say, looking really, really, really good for the beginning of the week. We've got some great positions on and got a lot of potential. A lot of potential. This is probably going to be another very good week. We murdered it last week. Absolutely destroyed it. Murder, death, kill. Nothing to say. We killed it. Just death and destruction of the markets. We're doing very, very well, trading at an elite level. Legit. Euro yen. Same thing. You know, we just took a little pullback short here. It's up. It just makes sense. For a couple different reasons. It's also in supply. You know, we're just looking for this to be a range. We know how market cycle structures work. The market cycles work, and the cycle structure itself. We know that coming off of a high, it's dropped and gone into a consolidation. It's likely that this is a range high. If you zoom this out a little bit, you know, and this is a lot of stuff we do in the group, but there's, you know, it doesn't really have anything to do with entry and exit strategy. But it's just cycle structure analysis. Like, what's actually happening here? Markets move up and down. They step up and down in ranges. There's no diagonal trend lines here. That doesn't exist. It's a diagonal trend line is just a linear progression of price over time, and it's the time that is the factor that causes the line to be diagonal. And there's a reason that trend lines break is because there's something else that's happening in the market that you're not seeing if you're using a diagonal trend line. So, and it's this. Markets move in ranges. They range and they step down into another range, right? So our better bet, our better risk reward is to sell the top of this range. You can see what's happening here. We'll see what this looks like later. We're really shooting for the bottom of it, but within a day trading context, we already know where our targets are. We already know every day at 3 a.m. where our targets are. So we'll see what happens here. It's unlikely that it pushes straight through to the upside. Could, it's unlikely. EuroCAD. I mean, same thing. Price action wise, this is very weak. This is very weak. We've dropped off a high. It's gone into a consolidation. We have a gap to the left, back into density. It's the same playbook. It's just likely to do that. It's the same playbook structurally. Also broke a swing high previously. So we have a higher high. We've sold off of a higher high on the macro and gone into a consolidation with a gap below us. Not a good look for the EuroCAD. So this could be painting a picture as we go through the euro pairs that we might have some just weakness in the euro as an index itself. The euro, the currency, could be continually weak because all of these look like they're starting to slow down. But look what happened. Look at what it just did. Do you really want to start buying this now? Yeah, there are some potential levels higher. Doesn't mean they're going to hit it immediately. We're above all these macro highs here. First thing we're looking for is some downside there. Nothing to say. We'll watch shorter term time frames, but first thing you're going to be looking for is down here, just simple price action wise. Just simple price action. It has nothing to do with strategy, but look at the distance that could be traveled. Talking about 200 pips. 200 pips. What if you catch it? So we'll come back to that. Euro pound. Try to get through this a little quicker. Everything's looking good now. Come on. Come on, NASDAQ. Hold on a second. Yeah, I saw that everything just pushed again into profit. Hoping those indices come down. We're going to talk about that in just a minute. Euro pound, some really good trades last week on this. Obviously, just complete murder, death kill on that. Still valid to the downside. This is just a range as far as the structure is concerned. This is just a range. Somewhere near the middle of it, but bearish. Not the greatest entry right now. We know what we're looking for the higher risk trades. We're going to wait until they get to the higher risk trading places. But right now, we're right dead smack in the middle of a range. Probably not the best idea. However, we've identified that the euro is probably going to be weaker than the pound. The pound, so what that could be is potentially pound strength coming in that could push this down. Again, relative volatility is an extremely important concept to understand to help you determine what to risk your capital on. Looking good here. Heikin-Ashi on here. I was testing Heikin-Ashi. So look at this entry. Short pound dollar. Killed that. Was implementing fully automated Heikin-Ashi, multi-time frame Heikin-Ashi into the trading bot this week. That's what that is. Doing some testing there. It's looking really good too. Separate video, separate subject. Euro pound. So yeah, the picture that we're kind of getting painted here is weakness in the euro in the short term. First couple days of the week, probably, potentially, at least today. We'll see how that plays out, but that's what it looks like right now. So that's where our bias is going to be. We're going to shift our bias toward a weaker euro. Every single day, use the analogy all the time of, the puzzle piece analogy. Every single day, especially at the beginning of the week, we come in here and the market gives us a whole box of puzzle pieces, and the market dumps all the puzzle pieces out on the table. And you have to put the puzzle together as quickly as possible so you can see what's going to happen. So you can figure out how to shift your bias. What is likely to happen? And again, I use the word likely. It's about probability. That every day, really every morning, You dump a bunch of puzzle pieces out on a table, and you got to put that puzzle together as quickly as possible so you can see what's going to happen. You can see the big picture. And that's kind of what we're doing here, is we're looking to see on the weekly puzzle, what is the puzzle this week for the weekly chart, or for structure. And then we drill down into lower time frames and figure out entries and exits. So Euro Aussie, right away it's a range. Hold on a second. Take a sip of the coffee here. Right away, it's a big range. Nothing to say here. No, just logically, let's just say we'll split it this way. It's a mess. We've also identified that the euro is likely to be weak structurally, or price action wise. We got a big spike high going into a consolidation. Those things tend to break low. We have a swing low down there to break. It's probably going to do something like that if I had to guess. And as soon as we break that swing low, we'd want to be out of it. Not necessarily the greatest short. And this could just be a low relative volatility situation between the euro and the Aussie. The euro and the Aussie may be traveling in the same direction. And because this is so choppy, it just tells me that, the Aussie and the euro are traveling the same direction at the same rate. Again, relative volatility. Most important concept that nobody talks about. I don't know what all this crap is. Lower time frames targets and stuff from last week. Circling swing lows. Try to clean up my charts a little bit. Euro Kiwi. It's very likely going to make the same move as Euro Aussie. Huge mess here. If you wanted to do this, you can see what your effective trading range is. It's a mess. I wouldn't waste my capital on this, to be honest. It's too much. There's not enough relative volatility here, where the base currency is going one direction and the secondary currency is going a different direction. We're looking for a synergy. Cars on the freeway analogy. We won't go into that stuff we do in the group. But explaining this with a very strong analogy on how markets work, why price does what it does. Moving on. So Euro Kiwi, Euro Aussie, generally trade them together as a basket. It looked like they're going to go down. That's kind of where we left off there. Pound dollar. Moving into the pound. This thing has been a screamer on the way up. This was the Liz Truss debacle where she talked about cutting taxes in this market environment. Everybody sold the pound. And now look at it. We talked about this on the day that it was happening. Now look at it. It's back up 1,500 pips. Is anybody shocked? Probably not. We talked about this at the time. Traded it multiple times in here. I just wish I would have gone YOLO for the win down there. Anyway, pound dollar. Same thing. The dollar, the component, the secondary component of the pair, pound dollar on pound dollar, the dollar US dollar index is likely to gain, right? So what do we want to do with pound dollar if the US dollar is likely to gain? It's very easy, right? Relative volatility. The pound relative to the dollar, what is going to happen? So even though the pound is actually a little bit stronger this morning, so this may not perform as well as some others, but still it's looking pretty rough here. I got an epic entry on this too, right on the top. So from Friday, but you can see what happened. We hit our point, the last point where our sellers were correct in the move and have not been stopped out. Well, that happened Friday afternoon. Everybody who moved their stops to BE just got hit. So now what? We've got equal body lows potentially closing here on the 4 hour. That is not a good look for pound dollar. We're short. We're going to stay that way until it's invalidated. There's no reason to do anything but short this unless you're trading a 1 minute time frame, which bless your heart. I wish you the best. Yeah, so sticking short on this. We're watching lower time frames for potential entries. Nothing to do. We're up. We've got $1,000 target today, trying to hit 1%. Ultra low risk. Ultra low. Biggest position size I have on is a mini lot, 0.1. Trying to hit $1,000 target. Pound yen. The yen is building its own adventure here is probably what's going on with this. We looked at that a few minutes ago. However, we're approaching a level here where the yen may be at the end of the line today. Hold on one second. Voice wrecked already. Sit here and talk all week, all day, all week. So the yen is probably getting close to the point where it's likely to reject. We may get a potential like evening star kind of price action here. We'll wait and see how this 4-hour candle closes. It just opened, so I wouldn't be surprised if it dropped. It already did drop a little bit, but this is not a long right here. This could just be a range. We don't know what's going to happen here. This could even reject right here and go back and retest the low of this range. Everybody who's buying it up here is going to be in trouble. So we'll watch that. It's not the best. It's not the best entry. And as far as the long, just taking historically significant levels into account, we'll just say that this was a range here. This was a range here. I know, shocker, right? Hard to imagine. A lot of times when something is ready to step down, it'll consolidate and do this kind of thing before it takes another leg down. But what we're not looking to do is buy this. That doesn't mean it's not going to go up a couple pips and then, it's not going to happen today. It's extremely unlikely that that move would happen today because of where this is in its range. But that's, group stuff. Range tool tells us what we need to do here. We already know instantly what our decision is on pound yen immediately without even thinking about it. So what we're not going to do is buy it, but could potentially be a range. And if this starts to retest the low of this range, we'll at least have our effective trading range over the next day or two. So that's a thing. Pound CAD, waiting. It already hit. This is a lower time frame level that's refined down. This hit on Friday, likely to be a distribution up here. This is probably just consolidating, guys, right here. And it's not the best thing to do right this second. Obviously, we don't want to mess with in the middle. Price action hamburger, we stay out of the meat, stay out of the middle. Not going to spend any time on that. This is interesting. Pound Swiss, because the Swiss is doing something a little different. We know what we're watching on the downside. To the upside, we're going to watch this block. Can't say order block or ICTL Suis, which is ridiculous. Yes, that actually happens. Trademarked the term order block and is suing YouTubers who monetize their videos and use the word order block. That is a 100% true story. Pound Swiss. We know what we're watching to the upside. To the downside, short term, we're just kind of we're creating some demand down here. So doesn't really look like a short. I'd have to look at this on the range tool. I'm not even gonna bother. Here, let me look real quick. Just because I'm curious, where are we? Yeah. I wouldn't do anything with it. It's right dead smack in the middle. No decision. If I had to take a guess, I don't know, because we're on a lower low. If I had to guess, I wouldn't mess with it probably because of what's going on lower time frames, but I would probably say long short term, just because just the price action move. The PA here would suggest, all right, so here, put in a swing low, burp, swing low, burp, swing low. What sound effect is next? Moving on. Pound Aussie. Kind of getting the same vibe. We got a lot of rejections down here. It looks like it's putting in some demand in a range. It's just in a range. It's not amazing. And this may tell us what you were kind of getting a picture painted of the pound, potentially some strength in the pound, which, that makes sense. What would I rather do short term? Again, I'm not going to bother messing with this too much on lower time frames right this second, because I know what I'm watching today. But, you know, I could see some upside there. That would make sense. You know, I think this other level refined down a little bit. You can see what's going on here. You know, we'll just say that, you know, where are your buyers that have not been stopped out? You know, so our effective trading range is something like this with a couple stops on the way up. You know, it's not the best entry right this second. Rather be long. If this were to dip down a little bit, I might try at low risk. If this dropped a little bit down back into, you know, something a little lower and it lined up with some levels that I'm watching on the tool, then maybe I would take it. I don't know. I'd have to look at it. What I'm not going to do is mess with it right this second. It's not the best entry. It's also probably, you know, I could see it going up a little bit. Next. So kind of the thing is moving on into pound Kiwi. So I was going to say the Aussie and the Kiwi tend to run together. So pound Aussie and pound Kiwi generally make the same directional move. Kind of the same vibe here. You know, it's come off the low. We're putting in something right here that we're not allowed to say, right? So just probably going higher. Probably going high. It's just a range like this. This is just likely going to end up being some kind of a range like this. A range consolidation below another range consolidation. You see how markets work? Like this doesn't have to be difficult. Everybody uses all these crazy like indicators. I used to do the same thing like 5-6 years ago. Try to find the best combination of, you know, this indicator and that indicator and this, you know, whatever. Markets, it's actually bad for you to do that. That stuff sets you back. That's not how markets work. Not how markets work. You know, it doesn't have to be complicated, is the point. Understand where you are in the universe. Make good decisions. Pound Kiwi. You know, we can get a good idea on where we're probably heading there. We don't need to go into it. It's not the best entry. Again, if it were to pull back a little bit, maybe I'll give it a shot. Shorter term time frames, you're going to run into some trouble here. You know, we're just looking at what's likely to happen over the next little bit. These are 4-hour candles, so we could probably expect a day or so of price action within these effective ranges. And as the markets change, so will our bias. But as of right now, we're looking for the money. Where is the money that has not been taken off the board yet? Not necessarily a good entry. We'll come back to that. CAD yen. Interesting. Range low. You know, one could make the argument of this. And look at where we are. Much closer to the bottom of that range than to the top of that range, right? One could make an argument that we're still technically in a buy zone, and you definitely do not want to be short CAD yen. You don't want to be short. I don't know if it's going to be yen weakness or CAD strength or both, but we don't want to be short. And right now the CAD has flipped the yen. We're looking for pullbacks to buy this. We're buying pullbacks on CAD yen. Write that down. Look at structurally where this is, what market cycle wise, what's happening within our range. Come back to this. Mark it down. Mark that one. Dollar CAD. I have a very, very good long entry, like right on the bottom in the wick on the lowest candle from Friday, because I positioned against the dollar on Friday and got a very good position on somewhere. Yeah, it's pretty way, way, way down low. So long dollar CAD until that invalidates. There's no reason to do anything but that. It could be very, very good. Again, structure wise, just breaking this logically down. What if it's this and we're going all the way back up to retest the top of that range, and it's just a big consolidation below a previous consolidation in the market cycle, and we're stepping down? And what we're trying to do is return this back up to the top of the range to short it, to potentially break the low next time. So, but right now, these are 4-hour candles. Looks like upside this week. We're not going to bet against dollar CAD right now. The trend is your friend until it's not, and understanding when it's not is extremely important. So we already have our bias. Got our bias here. Got a whole bunch of mess here. This was just stuff from Friday. And so we'll watch that on the way up. We'll just watch that level. Doesn't have to be perfect. Just to get a good idea on where we are structure wise. So we can see what's going on there. We know we don't want to be short. So we're probably, as long as it lines up with strategy, we're going to be buying pullbacks for the rest of the week, probably on dollar CAD. So that's a thing. Giving out some gems here. Giving out free money. NASDAQ. Well, let's go rollover. It's obviously not a long. It's clearly not a long. I can take a sip of this coffee. Way outsized move. This was wild. NASDAQ did 10% in a couple days. That's not normal, guys. We know that. Like, that is not normal to do 10% in basically a day. Not even a day and a half. Come on now. To break a swing high above a range high. Broke the global swing high up here. Come on now. You want to start buying this now? I don't know what to say about that. Could it go higher? Sure. Is it going to do it from here? Do you want to, and it's the from here keywords. That is a very important phrase. Relativity. From here, is it a good idea to start buying this? Good luck. I don't know. I know what I'm looking to do. Skip it for now. Same thing on the S&P. You're going to have identical structure on the S&P. This is just, man, up, broke the high, in the money, Look out. I know what I'm not doing. And we'll leave it at that. Dow, same thing. The Dow had an outsized move by percentage earlier in the week, and then kind of slowed down a little bit on Friday. You notice the Dow pulled back a little bit on Friday for the people who were paying attention to that. And the NASDAQ kept going. NASDAQ kept flying to the upside, and the Dow actually stopped and pulled back a little bit toward the end of the day. But it had already had an outsized move earlier in the week, so it had less to gain as the end of the week went on. The NASDAQ had more to gain, so they kind of caught up with each other. There was an imbalance as far as volatility goes between the major indices, U.S. market indices, toward the end of the week, and that may have kind of resolved itself. Again, we're watching a little bit higher potentially levels here. And if for some reason this pops up here, we know what we're doing. We're watching for the high of the day every day until it stops, until it pays out. What I'm not going to do is buy it up here. Anyway, and then again, watch Bitcoin, moving back into what we were just talking about this earlier, how strong the correlation is between large cap crypto and U.S. equities. If we know that the NASDAQ and the S&P are way up on a high and probably going to pull back significantly, and I mean significantly with a capital S, careful with crypto. This whole bottom could fall out and just crush people, and we don't want that to happen. I don't want to see a bunch of people lose money. I'm not buying it. I may trade it because of the volatility. There's going to be a lot of people step in and try to buy this thing, but what I'm saying is be careful, is all I'm saying. Because what if all this whole thing starts to sell off in U.S. equities and it's just house on fire in crypto? Just be careful. Oil. Where are we on oil? Had a great short at the end of the week. We're kind of right in the middle of a range. We're in a consolidation. I actually see this pulling up a little bit higher now that it's pulled back a little bit. At the moment, we potentially have some kind of a range like this. And I don't necessarily want to be short from the bottom of said range necessarily. That's not probably a good idea given the macro structure of things. What this looks like to me is that this is going to pull up and do this kind of thing. I don't want to be short here. I was already short on Friday and I took profit on it. I don't necessarily want to be short here. I do believe that oil is going to go much higher. And it's just not necessarily the greatest entry right now. Sometimes it's like that, where you do have a bias, but it's not necessarily the best entry. I'd rather be long than short personally. This just not financial advice, just life advice, because of the geopolitical situation and the technical situation as well. But technically, I don't want to sell what could potentially be the bottom of a range. I would let this candle close first and see what happens here. Does it look like it could potentially hold as a range low? And if this thing drops all the way down, that's why I say let it close first. If this drops all the way down, we'll have a different piece of information and potentially just an extended range. And I know that there's some money down there, some area of interest, an inflection point is how we describe it. So what I want to see is this candle close first, but if it closes with a wick on the low like that, that could potentially give us the lower boundaries of our range as far as the PA is concerned, just a price action and structural move. And if this holds a range, it's likely that this is going to happen. Had a overextended sell-off, pulled up into a consolidation, right? We try to catch the bottom of the range for the second leg of the move. It's just the way it works. So what we don't want to do is sell this at the bottom of the range, right? Next, silver. Tried to short this thing all week last week. This thing was so burnt. Silver is so blown out that it's ridiculous. Same thing. Zoom out a little bit. Look what you got. The funny analogy of Mr. Slithery the Snake. Mr. Slithery the Snake is slithering up and down the mountain, and like you're reading to a child in a children's book. I use this it's a funny analogy, but there's a point. Mr. Slithery the Snake is slithering up the mountain. He goes up the mountain, then he comes down the mountain, then he goes up the mountain, then he comes down the mountain, then he goes even higher on the mountain. And you give a 5-year-old a crayon and you say, where is Mr. Slithery the Snake gonna slither to next? And what do you think a 5-year-old would do? And that's the point. Question doesn't need to be answered. If you handed a 5-year-old a crayon, what would he draw? So, moving on. We know what we're looking for as far as structure and price action is concerned. We're waiting for the point, what I call the transitional period, where higher highs become a range and then become lower highs. It's that transition. We're looking for that transition where an uptrend becomes a range first. And when we can start to identify the range at the high, then we can start looking for the lower high. The lower high for the confirmation short. But first we try to call the top. Try to call the high first. We're very good at calling tops and bottoms. We just happen to be good at it because of that piece of information, that range tool. We have a very good idea statistically where our highs and lows are. But that's strategy stuff. Gold. Man, just a target-rich environment this week. There's going to be some very good trading this week. It's looking like we're pulling back short term. Still looking good. I'm short gold from the tippy top. Actually, not quite the top. I'm like right in here somewhere, short. My entry is 1766.31. 1766.31. So right in there somewhere. I knew it was somewhere because I shorted it the first time when it was right here. And then it popped a little bit and then sold off. Big railroad tracks at the top. Looks great. infinity to the downside. Also potentially an area higher, but we're not looking for that yet. This was way overdone. As statistically, as far as overextended goes, holy cow, gold was way overdone. This thing is burnt toast, and it's going to pull back, and it's going to be a good week trading gold back to the downside from where we are, at least. We're going to watch structure here and then just hit this thing until it puts in the low, and we'll see. And if that information changes, then we'll change our bias. But as of right now, man, euro dollar's flying to the downside, by the way. On our group trades for this morning, we're doing pretty good. Oh, okay. That looked like one of the positions closed. It was a bot. So, well, we don't want to sell it now. We don't really want to sell this now, but there's likely to be some type of a pullback at least the first day or two of the week. And we'll watch this. We'll watch it on the range tool, and I mean, pretty much got a good idea on what's going on with it. We don't want to be long. We know that. And there may be some bounces back and forth. I'm not talking about a 1 minute chart. I'm talking about where are we going this week? Like, what are we actually looking for? And this thing is burnt toast. It's burnt as far as the ferocity of the move in the short amount of time that it got there. And that matters. How far the move has been made by percentage in the time that it's happened matters. Trust me. So what we're not looking to do is buy it. We have our targets to the upside, where if we get a high of the day up here on a range tool, we'll start selling it up only at the high of the day and where the money is. And if it's until then, we're selling green candles until it gets back into some kind of density or something. This could be absolutely brutal on gold. Pure brutality because of how overextended this was. So what we're not going to do is buy it. Now, cliff notes. What did we learn? What is the weekly prognosis? Strong dollar, right? That's a thing. We're positioning for a stronger dollar early in the week. Or, basically, whatever. I don't have to tell everybody what to do. It's not what I'm really here for. We're positioning for a stronger dollar. The euro could potentially be weak. We saw at just the euro overall, see euro CAD's coming down. We talked about all this. We're weak bias euro, strong bias dollar, and those two things make perfect sense. Because we have a stronger bias on the dollar, and because all of these indices and all this stuff got so far blown out, at some point we're probably going to be risk off. We may get a day or two pulled back to the upside. Just to finish the move, it could be a lower high too, as far as the stock market indices go. So right now we know dollar up, probably risk off. It's looking like we're going to be risk off, and safe haven currencies up. Still looking good here. Our euro dollar short is just doing work right now. Doing work on euro dollar. Look at that entry. Ding. Killed it. Murder. Oh, long way to go. No, we're not even close. Oh yeah. Let's go. So that was, that's 40 something pips right there, just getting started. Pound dollar, same thing. Euro Aussie dollar, same thing, but euro dollar starting to go. Euro yen is beautiful entry on euro yen. So, as far as what's going on so far today, that's what we're looking for. Hope somebody got some good information out of this. As the information changes throughout the week, bias will change. But as of right now, we're just trying to get a good look on what's going on. Take a look at where we are structure-wise, market cycle-wise, what's likely to happen. I think we got a pretty good idea on what's going on. I have a feeling this is going to be a very good trading week. There's a lot of opportunity. The market is rich with opportunity right now, and we're going to cut this video off and go capitalize on some of that opportunity right now. So everybody have a good week, and see you later.